The U.S. Treasury has recently intensified sanctions on Russia's oil sector, targeting major producers Gazprom Neft and Surgutneftgaz, along with 183 vessels involved in transporting Russian oil. These measures aim to curtail the revenues funding Russia's activities in Ukraine. A significant portion of these tankers has been supplying oil to China and India, which have become primary consumers of Russian crude following Western sanctions, and a G7-imposed price cap in 2022. The new sanctions are expected to severely disrupt Russian oil exports, compelling Chinese and Indian refiners to seek alternative sources from the Middle East, Africa, and the Americas. This shift is anticipated to drive up global oil prices and increase freight costs. Analysts note that the sanctions will significantly reduce the fleet of ships available for Russian crude deliveries in the short term, leading to higher freight rates. Approximately 143 of the sanctioned vessels are oil tankers that handled over 530 million barrels of Russian crude last year, accounting for about 42% of the country's total seaborne crude exports. Of these, around 300 million barrels were shipped to China, with the majority of the remainder going to India. In response to the anticipated supply disruptions, refiners in China and India are expected to increase their procurement of oil from compliant markets, particularly the Middle East. This increased demand is likely to elevate spot prices for Middle Eastern, African, and Brazilian crude grades. Indian refiners may also consider sourcing oil from the United States to compensate for the shortfall. The Kremlin has criticized the new U.S. sanctions, warning that they could destabilize global energy markets. A spokesperson stated that Russia would monitor the situation and take measures to mitigate the impact of these sanctions. As the global oil market adjusts to these developments, consumers worldwide may experience the effects of increased oil prices and shipping costs. The full impact of the sanctions will become clearer as refiners and traders navigate the evolving landscape of international oil supply and demand.